Hello, class. We begin looking at corporations in Chapter 39. I'm going to switch out now to the PowerPoint so we can get started. So in Chapter 39, we're going to look at how a corporation is formed, and then in the following chapter, Chapter 40, we'll look more at operations. So corporations, let's put a definition out there. It's a legal entity recognized under law. Corporations are formed under state law. They're created with ownership held by one set of people called the shareholders, and the management in the hands of another set of people, the directors and the officers. And we'll be looking a lot more specifically at each of these categories of people that are involved in a corporation in upcoming PowerPoints and in the upcoming chapters. Right, some other general points about the corporation. One of the major points to remember is about corporate taxation. There's always a double level of taxation when we are talking about the standard, what we call a C corporation. The taxation occurs at the corporate level. When the corporation is making money, they're going to pay taxes on it. And the second level of taxation occurs when, after making profits, the corporation distributes those profits through dividends to its shareholders, and the shareholders have to report that income to the IRS and pay tax on it as well. Right. Corporations are recognized, though, as persons under the law, and they will have most constitutional rights, just like you and me have. All right. They don't have all the same rights, but most of them. So, for instance, due process that we all enjoy, that's the right to a fair procedure and process, and the right against double jeopardy, a right not to be charged and tried a second time for a crime that you've already been cleared of. All right. Generally, you can think of a corporation as a person. Right. Now, corporations do have some tort liability for the conduct of their officers or agents that are acting within the scope of their employment. And there's a case in your textbook. It's case in point 39.1. It refers to a Mr. Belmont and the company that he worked for, MB Investment Partners. Let me go out to it right now just to put it up on the screen. All right, I need to... There we go. I need to load it up. Here it is. All right. Mark Bloom was an officer and a director of MB Investment Partners, Inc. Oh, I think I got the names a little mixed up here. All right. And he formed North Hills LP, a stock investment fund. All right. Bloom and other MB employees use MB's offices and equipment to administer investments in North Hills. All right. Later, investors in North Hills requested a full redemption of their investments, and by that time, however, most of the funds had been invested, that they were gone. All right, what had essentially happened is that Bloom had taken the money and used it for his own personal expenses. What it says here is a lavish personal lifestyle. He had created a Ponzi scheme that had ended up siphoning off $20 million from North Hills for his own use. All right. So Barry Belmont is not the person who did this, but Barry Belmont is the plaintiff who was one of the investors, and he filed a suit in federal district court against MB alleging fraud. The court held that MB, which is the company, was liable for its employee Bloom's fraud. Right, so MB appealed, saying that they should not be held responsible and that Bloom was acting on his own, but the appellate court affirmed what the trial court had ruled, and the tort liability could be attributed to the corporation for the acts of its agent that were committed within the scope, within the work that Bloom was doing for the North Hills group or the MB group. So illustration for us of what we were just looking at in this particular slide. All right, let me go back here. All right, before we go on to take a look at the various classifications of corporations, just want to pause and go over a summary here of our advantages and disadvantages of a corporation. We did something like this with partnership. We did something like this with LLC. So advantages, the number one, shareholders or owners, they have limited personal liability. Their investment is the maximum that they may lose should the corporation fail. Right, number two, ownership is separated from management. And when you do that, you're more likely to have professional management, a higher level of management. Number three, third advantage, a corporation is a perpetual entity. There's no time limit on how long a corporation may operate. Right? And up until recently, there were some very long-standing corporations in American, the American business world. For instance, Sears, right? Sears only recently has, failed, just not able to keep up with the changing, commercial times. But Sears has been an American company, a fixture, for over 100 years, 120 years. All right. So there's a perpetual life to a corporation. And then number four, it is easier to obtain capital. Generally, when you're a corporation, banks feel more comfortable. One reason is a corporation is ongoing, and there is this higher level of management skill. All right, let's look at the disadvantages. Disadvantages, number one, there's formality that's required in the operations, and I've made reference to that. Every decision must be documented. You need to have a paper trail, right? And then the second disadvantage I've just explained to you is the double taxation that is associated with a corporation. The double taxation being payment of taxes at the corporate and the individual shareholder levels. We'll take the next section and look at different classifications, different types of corporations. And so here, what you want to do is to learn these new terms, these descriptive terms. I'll try to point out to you the ones that I want you to focus on because I'm not going to ask you to learn all of them. All right. Some of these are just more often used, and so those are the ones I've chosen for you to learn. All right, so in terms of how to describe a corporation, we can take a look at this first trio of terms, and two of the three I think are pretty commonly used, and those two are domestic corporation and foreign corporation. All right, so what's a domestic corporation? A domestic corporation is a corporation incorporated in the state in which it is doing business. All right, so a California corporation, one that is formed here in California and does business in California, is called and referred to as a domestic corporation. If you have a corporation that's formed in another state, let's say it's formed in Delaware, which many corporations are due to the corporate laws there. All right, so you have a Delaware corporation that is doing business in another state. Let's say it comes to California and runs a business here. All right, that particular corporation then from Delaware would have to register in California. It is originally a Delaware corporation, so we call it a foreign corporation here in our state, California. The third term up here on the screen is alien corporation. An alien corporation is formed, incorporated outside of the United States and is doing business here in one of the states in our union. All right. I have not seen this term used, I don't believe, so I will not ask you to learn this one in particular for our course. All right, but you can tuck it away in your memory, and if you see this alien corporation in any of your future studies, you know what it refers to. All right. Right, and just to emphasize, for a corporation to be recognized in the state, it must be registered. All right, let's move on. All right, we have a private corporation and we also have a public corporation. You can link those two together, kind of a pairing there. A private corporation is formed and is owned by individuals or some other private interests, unions, pension funds, right? Private interests, all right? When they are the investors in a corporation, we call the corporation a private corporation. You might think of it as privately held almost, all right? All right. Now, when you hear publicly held corporation, or you hear someone talk about a public corporation, it is not the same. The two are not the same. Public is not the same as publicly held. We can have individuals own a corporation that is publicly held. This is what we mean when we buy stock on the New York Stock Exchange. Those are private corporations, Microsoft, Amazon, but they're publicly held in the sense they're publicly traded. All right. Now, another term, just to throw in the mix here, not to confuse you, but if you hear the phrase privately held corporation, it is very similar to this term private corporation. Privately held may also be synonymous with a close corporation. A close corporation is a corporation with a few shareholders, not hundreds and hundreds of people investing, but maybe a limited group of people that know each other, could be all family members. We would call that privately held or a close corporation. And example of that would be such a corporation as In-N-Out. In-N-Out Burgers, that's held by one family. That's a close corporation. All right, moving on then. Public corporation is entirely different. Public corporation is a corporation formed by the government to serve a public purpose. So, for example, you have utilities. They are formed to offer a very important service, electricity service, communication services, not so much communications anymore since that's been deregulated and broken up, but energy is still pretty much within this realm of a public corporation. Public TV, that also would qualify as a public corporation, all right? So formed by the government or a governmental type agency, and it serves a public purpose. All right, we'll move on then to take a look at a nonprofit corporation. Right, a nonprofit corporation is formed very much like the previously discussed corporations, but it is formed for the purpose of a charity or for some educational reasons, religious purposes. All right, so it has in mind what it's going to do. It's not going to be making money or generating revenue to make a profit, but instead will organize itself with the goal of serving a purpose, and whatever money it does take in is put right back into the company, and there's no profit. It just covers their costs. That's a nonprofit. Now, to qualify as a nonprofit, after you form as a corporation, you have to apply for this status as a nonprofit corporation. Right. I've already been over close corporation, in a shorthand kind of way, but I put it up here on the screen for you so you have at least it outlined. All right. You may think of close corporation as another way of saying closely held corporation. All right. And what you see commonly with a close corporation, since there are few shareholders, maybe perhaps like I said, people that know each other or all family, in order to kind of maintain the intimacy of the corporation, the method by which they decide to operate, there is often an agreement to restrict the transfer of stock. So the shareholders will agree, that if they want to sell their shares, they will first offer their shares to the other shareholders. We call that a right of first refusal. So you may run into that in the shareholders agreement connected to a closed corporation. In addition to that provision, the right of first refusal, you may also see some other provisions regarding voting and whether someone will be able to control some of those issues that may come up. So that's what you look for in terms of a closed corporation. Right. Let me move on to letter H here, sub S corporation. A sub S corporation is also a closely held corporation. There will be only a few shareholders. This number of shareholders is maxed out. The maximum is 100. And the other qualification to be a shareholder in a sub S corporation is citizenship, U.S. citizenship, or permanent residency. So only U.S. citizens and permanent residents qualify to hold shares in a sub S corporation. And so if you are creating a new corporation, you have only, let's say, a handful of investors. If any one of them is not a U.S. citizen or permanent resident, you cannot create the sub S or the S corporation. All right. Sub S and S are the same. I just put it up here as sub S. All right, now what's the benefit though of having a sub S corporation? And this is something that's in the first bullet point there, but I didn't talk about initially. The main benefit of having a sub S corporation is that it will be taxed like a partnership, meaning that there will only be a single level of taxation at the investor's level. And this is the reason or the thinking behind a sub S, to give U.S. citizens, permanent residents, small corporations this benefit so they do not pay a double level taxation. Right, letter I, we'll look at professional corporations really briefly. These are formed by professionals, so attorneys, accountants, architects. And what it does is that it will limit the personal liability of each of the shareholders for their regarding the non-professional liabilities, not their malpractice liabilities, but the non-professional liabilities. So, for instance, the rent, the payment of the rent, or any other payments for like supplies. So, professional corporations may be formed here. So, just another option for professional practices. Right. Moving to letter J, this is a fairly new corporation. This is called the Benefit Corporation. It was introduced in California in 2013. It is a for-profit corporation, so formed very much like the domestic corporation we talked about earlier. It is considered, a C corporation, C being the standard corporation. The difference here between what we looked at earlier, private corporation, the standard corporation, and a benefit corporation, is that a benefit corporation will have an articulated goal of having a positive impact on society. They want to do something with their corporation to affect the environment, let's say. That's one of their goals. So the directors then are allowed, when they are making decisions, to consider the goal along with making a profit when they are deciding what direction a corporation should take. All right. So as part of declaring or deciding to be a benefit corporation, the annual report must also report on these stated goals. What kind of progress is the corporation making on the stated goals? I have not read very much about the benefit corporation since this introduction in 2013. Cannot really tell you, are there many corporations that have taken this up, and how is it really affecting the purpose that's behind the allowance of this type of a corporation? But it would make an interesting read if someone has done the research. All right, now that brings us to the end of this particular section. There was one last thing I wanted to show you, and I'm sorry I advanced the slide, but what I wanted to show you in connection with the classifications of corporations is out here in your textbook. I'll try to move there as quickly as I can. There is a concept summary in your textbook, and my reason for bringing this up is just to show you some of the tools that you have available to you in your materials. I'm sorry I have to scroll through all of this to get to this. Here we go. This is the classification of corporations. It's concept summary 39.1, and you have my slides, which already give you a bit of a summary, but you might want to look at this when you're studying. It also outlines for you some of the major points regarding each of the various types of corporations we have discussed so far. All right, I'm going to end this recording now, and I'll see you when I create part 2.